Hello and welcome to the extensive weekend video, which is called S&P 500 breadth was correct in flashing a warning sign within a target session that is a continuation of post-NVIDIA earnings. What I would highlight about Friday's session is that those downside risks have materialized, however they had been quite quickly bought in a V-shaped recovery. So we will dive as well into the sectors as to what that means. You can see that the weekly market breadth had not been recording a nice upturn that would be conducive to extensive stock market gains. This is within the sideways to slightly bullish pattern bias that had been prevalent. We can see that the advanced decline line and advanced decline volume are at nothing to write at all about letters. Similarly, the McClellan's summation index is showing that the rally's internals are weakening as much as the rally as the stock index price is bumping around between various levels that you will see on the following charts. The downswing had been rejected, and it is within a very technical pattern of trading, which corresponds as well to this particular setup that I will dive into further with clients as to the percentages of stocks trading above various periods of their moving averages. And we can see that the 200-day is precariously above 50 and the 50-day is more or less around 70, which is quite correction danger degree territory. 5-day perspective shows that the risk on turn is sputtering, however that is within the context of an upturn, of a bull upline. However, we can see that tech is underperforming and the real winner, actually it's not visible from this chart because this is just for a week that has just passed. This is about discretionaries. Look at which other sectors have been doing well. Biotech, anyone? When it comes to the daily perspective, the risk of view is very clear, not just within discretionaries to staples and tech, but also within healthcare, healthcare, utilities, and financials being the savings grace. On the hourly chart, and these here we have those two most important levels, 5.895 approximately, meaning up to the 5.8 low 90s. This is the first level. It had been undershot, and just as quickly the index had come back of 5.865 level, which corresponds to the lower turquoise line being drawn. So much for this pattern where we see buyers stepping in, and the name of the game is rotations. And you see that this basically flat on the day result in S&P 500 had been achieved on a very risk-off constellation. Diving into the individual sectors, technology is kind of nicely consolidating, and it would come back to shine just as much as semiconductors. This is reasonably favorable. favorable chart posture. Note that the tariff trade wars, China non-compliance tweet, these have been very quickly disregarded, and markets are showing what I have termed weeks ago as tariffs fatigue, meaning that they are not reacting as sensitively as when tariffs moved to the forefront and captured the spotlight. Discretionaries. Here it shows up a lot better that these had been actually the winning sectors in terms of getting acceleration later within this upswing, and this corresponds quite nicely to the China standoff being dialed back. Financials. Reasonable performance, nice consolidation, still ready to go higher. Industrials. This is not the picture we would be getting if the global economy were to be sinking into recession, and the same goes for copper performance, as we will see further on. The fly in the ointment is weaker US dollar performance. This is not what we would want to see, and thus far it is quite spread across the many currency pairs on my watch. Coming to gold, silver and miners, I had been talking in prior weeks favorably about miners, and they are leading. There are inflows. This is one of those better performing areas of the market. So we see a daily pullback in gold and silver, which is in the context of basing. This is not ready to roll over to the downside. Not here, not now, not yet. Copper, clear rejection to go lower, building, and it's going to overcome that troubled low for 80s resistance in reasonably no time. I see commodities as being quite undervalued here, and this is the overlaid line. That's CRB index, that's the commodity basket, and given where we are in the economic cycle and the path to monetary easing, one way or another approaching, globally approaching, this is going to turn up, and actually commodities are one of the most reasonably undervalued sectors at the moment for medium and long-term investors. You know me that I have mentioned natural gas. Oil demand is growing year by year. You know that on a world basis the consumption is growing by over 1 million barrels a day per year, and this is not going to be broken down by the West tightening its belt when China and India are gobbling up excess production, are relying on coal as well. So much for energy and what it is being reflected in when it comes to AI and copper prices and those Grasberg, for example. That's a very old mine, and similarly to oil fields, Guava and Cantero in Mexico, these are facing depletions, and the world is relying on ever decreasing return on energy invested. So much for what is building up to be a significant ascent in commodity prices. When here I'm talking months to quarters to years. While quite clear refusal to go lower, however not yet ready to swing higher. So very guarded price action, and this is not too appealing. Oil has not made a recovery following the Liberation Day in the East. Bitcoin, the stair-stepping pattern is being somewhat broken to the downside, and it kind of corresponds with the weakness of gold and silver on a daily basis, because the last two candles are already Saturday and Friday, and we see what has unfolded Thursday too. So we are going to be seeing better crypto prices ahead as well. Just needs to find the bottom, and that's the matter of discussion for next week. My joint page will help you select what's right for you based on what and how you trade, and forget not to combine the extensive daily analytics with one-on-one support together with premium intraday channels.